Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Happy Wednesday, everybody. I know usually it is a happy Friday because most of our episodes are recorded on Friday, but today we are recording on Wednesday and it is beautifully sunny out there. So I hope you guys are having a great day. It's a good day for another reason because we have Marco Santarelli with us on the podcast. He is, I mean, if you think about experience, this man has it. He does private equity and then also turnkey real estate. We're going to get really into how you buy turnkey and why you should consider that as an option. He also has a podcast called the Passive Real Estate Investing Podcast, and he is found at NaradaRealestate.com. So, Marco, thank you very much for hopping on the show.
Gabe, it's an honor to be on your show. So thank you very much.
Absolutely. I told you before we get on here, we always like to start with stories and hear kind of how people got to where they are today. You have a ton of experience. I mean, we were talking before you got on here. You on your private equity side, you invest in Broadway shows, and a few of them are nominated for Tonys. So I'm sure you have an interesting story. So why don't you take us to the beginning of your story and tell us, how did you get into real estate?
Well, thank you, Gabe. Yeah, it's actually a long story and goes way back decades ago. So I'll try and give you the very short version of it. Essentially, and I say this all the time, like I had a fascination for business and real estate as I was a teen. Somewhere around the age of 13, I realized I was an entrepreneur. And then around 15, I started to just learn and study and read about real estate investing and forming businesses and whatnot. So when I turned 18, I bought my first rental property. And that's a very young age for most people. But I just knew what I wanted to do. And that was the path I wanted to go because I wanted to create time freedom through wealth. And it was something I didn't learn all that well early on. But as I, studied the topic, I realized, okay, this is exactly what I want to do. But I was in and out of real estate throughout my life. And then I went full time in 2003. And while I was buying dozens of properties around that time, people were always coming to me, hey, can you coach and mentor me, or can you, help me out? And the thing is I was like, thank you. I appreciate you asking, but I don't have the time for it. But that's the light bulb moment. That's when, I realized, oh man, there's an opportunity out here. Being an entrepreneur, I realized that people still need help, even though they're spending literally tens of thousands of dollars on education from Robert Allen and all the other programs that were out there. I wanted to be the guy at the end of the food chain that said, here's a turnkey property in a good market in a good neighborhood that is new or like new, and I'll make it available to you because I've already done the research and due diligence. And that's basically how my company started 20 years ago, to provide what we call turnkey real estate investment properties. So while I was investing in real estate and building my own portfolio, I was helping other investors invest in the same product that I was looking at and buying. And that's how the business came to be. And that's how I basically went from a small-time real estate investor to a full-time real estate investor to a real estate entrepreneur, doing both at the same time. So that's the short version of how I kind of scaled into real estate.
Nice, man. I love it. 18. That's much younger than most people get started. Right. How did you buy that first? Was it in California that you bought that first house?
No, it was not anywhere close to California. To be honest, it was in Calgary, Canada.
Okay.
So because
although Calgary, that's still the housing prices are still pretty high up there, aren't they?
Very high. Canada is definitely on a housing bubble. The housing prices in Canada are astronomical. It's one of the most expensive markets, like including Toronto and Vancouver in the world.
Yeah.
And prices have just been driven up. And what really sucks about the Canadian housing market is that they can't lock into a 30-year fixed rate mortgage like we can in the United States.
I heard about that. Yeah.
Yeah. Their mortgages may be 25 or 30 years in length,
but it's variable
as an amortization, but they have to lock into a rate every 1 to 5 years, depending on what you lock into. So that means your interest rate resets every 3 to 5 years.
Yeah.
And so if rates are going up like they have been, people are forced into a situation where their mortgage payments are going to jump up radically.
That doesn't sound sustainable on a national level because so many people are going to be going into foreclosure if
Yeah,
they can't, support that. That's interesting.
yeah, yeah.
Um, yeah, well, that that is unfortunate. So, you're
But to
18,
answer,
but
yeah, but to answer your question, my first property was in Calgary, Canada. It was the end unit townhome in a northeast Calgary neighborhood, and needed some work. So I found it, bought it. I had enough of a down payment to buy it with a low down payment back then. Brought my uncle in, who was a tradesman carpenter, and
mm,
had him help me renovate the property. There was no internet back then, so it was basically a sign in the lawn and an ad in the newspaper.
nice.
Um, so I took applications, didn't know what I was doing because I had no management experience, but I basically interviewed, my prospective tenants, took someone in. And it wasn't quite textbook, but it was almost textbook. And I cut my teeth on that first property, and it was a good investment. It appreciated, it cash flowed, it did well. My biggest regret, and one of the biggest lessons that I can share, with other real estate investors, and, including your audience, is that you should never sell your real estate. Yes, you can trade it like through a tax deferred 1031 exchange, so you can, leverage up or build your portfolio. But unless you absolutely have to sell real estate, you should never really sell your real estate. It's a keeper. You always buy, you hold it for the cash flow, you grow the cash flow, you grow the equity. And then if the market changes that you're in, you can take that equity and move it through a 1031 exchange into other markets. And we do this with clients all the time. I jokingly say some of our clients are equity rich and cash flow poor.
Mm,
And that's true for where you live. That's true for coastal California, places in New York, Washington, D.C., Denver, Colorado. There's places all around where people own one or more rental properties, and they have a lot of equity. But they're not utilizing that equity, or they're underutilizing, the investments that they have.
mm,
And so if you know what you're doing, or if you're working with the right team, you can definitely, build your portfolio a lot faster than you think. You could leverage up. You don't lose the equity. You keep the equity, but now you're increasing your portfolio size, and you're increasing your cash flow, and you're also increasing the probability of gaining more equity across more properties.
yeah.
So it's a good strategy that most people don't think about or know.
Yeah. Yeah. Most investors that I talk with, they always say they wish they kept more if if they're towards middle or the end of their career and they think back on their career, they're like, the one mistake I wish I had is, or I wish I didn't do, was sell the properties that I did sell, because I wish I would have kept them. You could burn them, you could, take out a line of credit, you could refinance, take that equity, put it into different properties, and just grow your cash flow that way. So,
Yeah.
yeah, totally understandable. So let's talk about turnkey investing as a strategy, both from the perspective of somebody who wants to create a kind of business that you created, and offer it to other investors, and as from the perspective of somebody who wants to invest into turnkey real estate. Why would they do that? And then what does it mean to invest in turnkey properties?
Well, think of it this way. There's two types of investors out there, active, what I call active and passive. An active investor is usually not an investor anyway. They're a business owner. They're running a business, like buying, fixing, and flipping property.
Yeah.
So yeah, you might be making money, but you're running a business. You're not investing. A passive real estate investor is going to invest in real estate in one way or another, whether through direct ownership, a syndication, a REIT, whatever it is, but you're taking a passive role. But if you're going to be a passive real estate investor, what you're trying to do is build a portfolio, or let's call it a portfolio, because I don't consider, REITs in the stock market really a good way to invest in real estate. But you want to build a portfolio and have ownership over time to increase cash flow and equity. And so if you're going to take a passive role, you have two routes to go. You can do it yourself, meaning that you find the properties, or you start assembling your own team and looking for properties. But then, you have to do your own research, and there's a learning curve. You have to find what markets make sense, what neighborhoods make sense.
And you got to find the properties, which is the hard part.
Yeah, it is, especially today, and it has been for years. But knowing what to find and where to look, and doing your due diligence. So you can do it on your own and have a learning curve, or you can assemble a team that'll help you along, or not meant to be a shameless
Plug.
plug or anything, but if you work with a turnkey provider, like what I set up 20 years ago with Norada Real Estate, you can have a team, an entire team there for you right from the get-go. And so to answer your question, what it means to invest in turnkey real estate, I mean, I look at it two ways. There's the property, which can be a turnkey rental property, and then there's the whole experience of going through that process step by step to invest in those properties. So when you have a team ready to go, the education, the resources that you need, and the properties, it makes it so much simpler. You still have, you still make the decisions, you still call the shots, you still, maintain control. But regardless of how you do it, ultimately you want to choose the right markets, choose the right neighborhoods within that market to be in, because that's critically important. And then look at the properties that are available and choose from those, and make sure you do your due diligence, which includes inspections to make sure there's no deferred maintenance or anything like, or capital expenditures and whatnot. Where we come from, from the turnkey side, is basically this: if you think of a wheel, we're the hub of a wheel. So each spoke is like the properties, the property management, the financing, the inspections, and in everything else. We've already put it all together, so it's basically a one-stop shop. But regardless of how you do it, you could do it from scratch, learn it all yourself, and do it, and then hopefully not step on landmines and make mistakes. Or you can go on the other end of the spectrum and have it essentially done, not entirely done for you, but done with you, almost to the point of being done for you. And that's what we refer to as turnkey investing and turnkey investment property.
Yep. Makes sense. So what areas, like what markets are the ones that you guys are the most bullish on these days?
Well, we're in about 25 different markets. About 9 or 10 of those markets are very active for us and for our clients, our investors. The markets we focus on are, as of today and for the past few years, have been on the eastern half of the United States. So that would include the Midwest, like Indianapolis and Kansas City, Missouri. The Midwest or flyover country, because those are perennial markets that there's inventory and the numbers make sense. It's an affordable market, and the rent ratio to the price makes sense, where that property will cash flow. We have markets in pockets of the Northeast, Pennsylvania, 3 markets within Ohio, in and out of the Chicagoland market, because inventory's, not always available there. But then, down the Eastern coast, we have about 5 markets in Florida. Memphis, Tennessee is a perennial market. We were in Atlanta, but can't get inventory there. We were in Texas, but the numbers have stopped making sense there. Yeah. Dallas, Houston, San Antonio, those markets just don't make sense today. I'm missing some other markets, but let me think. But those, those are a good number of the markets that we're in right now.
Yeah.
So.
Yeah, you don't. Sorry, keep going.
No, well, I was just gonna say, there's been if you just look at the markets around the country, most of the markets have kind of cooled off from where we were during COVID, and to this point. A lot of the markets were running red hot, like 80 or 90% of the markets were running red hot in 2020, 2021, and then since then things started to cool down, and now they're more normalized. So a lot of the markets right now, maybe about 65% of the markets in the country, are what we'll call normal in terms of their growth. 20% are still considered, strong growth markets, where we're seeing like stronger price appreciation. A small percentage are very strong. I wouldn't say there's any slow markets in the country right now. Some markets are just puttering along, slow, like Salt Lake City, Denver, Austin. These are markets that were running hot for a long time. Now, they basically had to cool off. They're stepping back, and so, but there's still a lot of opportunity out there. Even though inventory is tight, there's still a lot of opportunity out there. You just have to know where to look, and then of course what to look for, and have the right team working with you. But you're going to have a hard time finding numbers that work in most markets on the western half of the United States. Of course, it's not just market specific, it's area and neighborhood specific. So within an expensive market, you can still find areas that work, that make sense numerically, but it's harder to find on the western half. You really have to look at some of these more affordable, what I call tier two markets.
Yeah. Yeah, I don't even look in any of the coastal city or coastal states really. We're really big on India. I like Indianapolis. There's some good numbers there,
Mhm.
but yeah, finding the right market is super important. How do you guys go about sourcing your deals?
Well, we have partners on the ground. We have contractual relationships with new home builders
Hmm.
and large scale property providers that are out there looking for distressed situations, like distressed sellers or distressed properties, and they'll acquire them, fix them up, and make them in like new condition.
Hmm.
So they'll replace the mechanicals and go in and do a cosmetic upgrade, and so they're like new. They're not brand new. They're in mature neighborhoods, like established neighborhoods, not out in the fringe, the path of progress where new home builders typically are building. But it's a combination of the two. So we just have long-term relationships that we've established with providers that give us, the type of inventory that checks all the boxes that we need to actually call it a turnkey investment property.
Got it. Oh, so you guys don't do like your own off-market marketing for like mailers and cold calling and texting and all that kind of stuff.
No, what our boots on the ground partners do. They're focused on one main thing, finding the right property that checks the boxes, fixing them up, and then creating a turnkey rental property. Then they hand them over to us, and then that's what we put in front of our clients. So our pipeline of inventory is made up of the inventory we get from our property, rehabbers and our new home builders.
Got it. Yep, makes sense.
Yeah.
All right, let's talk about just the market in general, and where you see it going in the next 2 to 3 years. Because you already mentioned you've noticed that it started to cool off these days.
Yeah.
So how do you see that progressing in the next couple of years?
For the next couple of years, the expectation in most markets, and again, we have to generalize a little bit here because we're talking, if unless we're talking about a specific market, like a local market, we end up talking about, averaging out all the markets in the country, the major markets, the minor markets, the outskirt tertiary markets. But we were seeing crazy appreciation rates, in 2020, 2021, averaging about 20% per year for 2 years in a row, and that's unsustainable.
Wow, that's
Right
crazy.
now, for the most part, we're going to see for the next couple of years, single digit, like more normalized, historically normal appreciation rates in many markets around the country.
Yeah.
The expectation is that it'll be single digit, plus or minus, some on the high single digit, some on the low. It really just depends on what the supply and demand dynamics are of that local market, because that's going to drive the price more than anything. But we're still going to see a healthy housing market. There still will be appreciation. Prices will go up, rents will go up, and what's driving a lot of that right now is the lack of supply. We are still undersupplied. It's actually interesting. Every single year right now, we are actually getting a little bit further behind in terms of how much inventory or supply we are creating each and every year to keep up with organic housing
Growth.
demand,
Interesting.
the growth or the need for those households.
Hmm.
So that is advantageous for you if you own real estate, or if you're looking to buy real estate, like as an investor. Um, so demand is strong, supply is short. We're not able to create enough supply to meet the growing demand. More and more of that housing stock right now is going into, well, I should say more of it's going into rentals. Right now, about 10% of all the homes out there are actually rental properties. So, and that trend has been decreasing, but the problem is we still see a shortage of housing. So there's a problem with undersupply. We need to create about there's different numbers out there, 1.7 million, 1.8 million new homes, both for sale and rent, each year right now, to keep up with the current need or demand for housing. But we're not producing that. We are generating about 1.4 million housing starts right now, and that's creating a deficit, like a shortage right off the bat of about 230,000 units each year at the moment. And so we probably won't catch up to where we need to be on this undersupply for at least the next 10 years. So wow. we have a lot of tailwind. We don't have a lot of headwind in the market. But again, we tell all our clients this, all our investor clients, when we talk with them, it's very important that you are investing in the right markets, not necessarily where you live. You have to be market agnostic. This is one of my 10 rules. You have to be market agnostic. So you don't be married to a particular market because you know it, you were living there, you grew up there. If everything makes sense in that market, the numbers make sense, there's inventory, the rent to price ratios are in line, great, then look, and find something there. But there's over 500 markets in the country. So don't feel that you need to be stuck or married to one particular market, because that may not be the best decision for you with an asset like real estate that is semi illiquid, and you're going to probably keep it for a long time or forever.
Yeah. I've mentioned this on the podcast quite a few times. Investing in the wrong market, not only the market itself, but as you mentioned, the neighborhood that you're investing in can really have an impact, not only on the return on your investment, but also just the headache that you're going to have to deal with. I invest in self-storage and in mobile home RV parks. And I've invested in self-storage and in markets that were good, but the area that I was investing in was just prone to property crime. And it was just a nightmare of a headache. And so I've learned that lesson too many times. You have to invest in good markets, and you have to invest in good neighborhoods in those good markets. And which is why it makes sense to hire somebody like yourself who's already done that research, knows where to invest. So if you really are looking for a passive investment, it makes sense to do the turnkey method, because then you don't have to risk your shirt on markets that may turn into more of a headache than you'd prefer.
Right.
All right. Well, hey, man, I just took a peek at the clock. It looks like we have run it down. It's time to jump into the quick question round. Are you ready?
Sure.
All right. It starts with education. Could be any form. Could be books, movies, YouTube shows, Netflix channels, whatever. Just give me 2 recommendations, one for general life wisdom and then one for real estate.
Well, can I plug my own podcast?
Yeah, for sure. Whatever you want.
All right. For real estate, passive real estate investing. That's the name of the show. It's easy to find. It's everywhere. Passive real estate investing.
Perfect.
For what was the other one? Life?
Yeah. General life wisdom.
General life wisdom, man. Wow. That's a good one. Well, let's see. You're putting me on the spot. There's so much good stuff out there. Recently, I've been kind of paying more attention to a guy who I've gotten to know named Tim Story, Storey. You can follow him on Instagram. He's always got a lot of great things to say. If you want to go back in time, though, unfortunately he passed away, but I've always loved Jim Rohn's material. Yeah. Jim Rohn's just amazing. I'm actually good friends with his business partner that helped put him on stage and on the map, helping him become, the big name he is, Kyle. So I've always just really loved Jim Rohn's stuff for decades.
Yeah. Jim Rohn's is him and Zig Ziglar were the two, when I first got into kind of like the self-development kind of genre. Those are the two that I really enjoyed. And good recommendations. All right, next question is for your younger self. So let's go back to the Marco who was out there in Calgary way back when he was 18 years old. Go back to him, look him in the eye, give him one piece of advice moving forward. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Well, I said it before. One piece of advice is, when you buy that property, or the first property or the next property, never sell it. Like hang on to it, just keep it. And if you ever think about selling it, just do a tax deferred exchange. I always thought about property as, let's make some money through, the price appreciation and flip it. And really, you're just doing what a day trader does or a swing trader. You're buying and holding for a short term and then just, flipping it for a capital gain. But that's not the best way to invest in real estate. There's far, far larger gains and lower tax implications if you hold it.
Yep. All right, next question. We've already gone over this a little bit, but I'm gonna twist your leg or twist your arm, whatever that phrase is, and make you choose one. So, what is the single metro in the United States that you're most excited about investing in today?
One metro. Man, well, there's always a depends, like an attorney says, it depends on what you're looking for. So for me, I always look at two things, whether it's about cash flow or whether it's about appreciation. Um, I would say
Actually, why
maybe,
don't you? I'll say two. Give one for each. One for cash flow, one for appreciation.
okay. So if I wanted to just buy and hold, for like just a steady Eddie type of market, I'd probably be looking at Kansas City, Missouri. I mean, I'm already there, but it's just a market that I've just been in for so long. It just has never done me wrong. And then for appreciation, right now, I'm very bullish on Florida as a whole, but the Jacksonville, that northeastern corridor, is attractive to me.
Yeah.
So is the Southwest corridor. That's been growing, for over a decade, almost 2 decades right now. The population growth there has been crazy.
Yeah.
So those two areas in Florida are definitely strong.
Yeah. Yeah. We we actually focus on Gainesville, Florida, which is just right there in the center. But I like Florida.
Yeah.
All right, next question is about lessons learned. Not every deal that we get into goes the way we expect it. A lot of times a wrench is thrown into the mix, and that is when we get to learn our biggest lessons and take them on to the next deal. So, what was a deal that went a little bit sideways for you? And then what was the biggest lesson you pulled from it?
The importance of the location, most specifically, and more specifically, the neighborhood, even down to the street level, because the market's important, but the neighborhood is infinitely more important, and even within that neighborhood is important. I bought many years ago a small apartment building in an area that is well located, and there were good parts of that area, that neighborhood, but the street or the streets that I was on was run by drug dealers, and even the police could never run them out. Like they would run them out, but they would always come back. It was just, for the longest time, an epicenter for drug activity. And I didn't know that at the time. I didn't realize it was as big of a problem as it was. And so I didn't learn that until after I bought the property. So if I would have done a little bit more, investigation and research and talked to more people, asked more questions, I would have, I would have known that important fact, because it would created a lot of problems in keeping the property leased.
Mm.
So I had high turnover because there was just always drug activity.
Yeah. So, I mean, that is a good lesson to learn. Now that you have gone through that, how do you kind of suss out unique, street level information? Do you call local property managers? And we're talking, I know you're in a lot of markets and you already have that information, but think if you went into a new market and you wanted to invest in, I don't know, Topeka, Kansas, something like that. And what would you do to intimately understand on the street level whether it is an area that you'd want to invest in?
Well, what I was just talking about is qualitative, not quantitative. information, right? So that means you need to talk to people who are familiar with that market, that are there. The turnkey provider like us, for example, and my team, the property manager that is familiar with, the properties that they manage in those areas within that market, that, they're a key team player, a key individual that you would definitely want to talk to and ask, these types of questions. That's how you're going to get that qualitative type of information. The quantitative information, is available pretty widely, and a lot of it free on the internet. There are subscription-based websites where you can get, more detailed analytical type of information, yes, I would call it analytical information, but the qualitative is really down to the people who work there and live there, like the property management company.
Yeah. And I would also add, if you call the police, they and ask like how many calls they get for a certain, if you're buying a self-storage facility or an apartment complex, you can ask like how many calls you get from this building, this area, and they'll usually give that to you, and that's kind of a good indication of whether it's a good or bad area.
Yeah.
Cool. All right, man. That leads us to the very end. I appreciate you hopping on here. For everybody who wants to get in contact with you, why don't you tell them, where they can find you, and then also what can they expect when they reach out?
What I've started doing is just giving out my Instagram and my personal website, because everything that I do is linked off of those, like everything from the the turnkey real estate to the private equity and companies I invest in, the Broadway productions that I'm involved in, all that stuff. So it's either Instagram at Marco G Santarelli, or my website, which is without my middle initial. It's marcosantarelli.com. And those link to pretty much everything else, the real estate website, the promissory note website, all that other stuff.
Perfect. I will put that link in the show notes. So if y'all want to reach out, just click the little more in the description. It'll pull down that full description, and in there you can find Marco's links. And I will say it's probably pretty interesting information on there, because didn't you mention you're a producer on 40 Broadway plays right now?
No, not that many. I'm involved in about 12 or 13 theatrical productions. Most of them are on Broadway. And I was telling you before we started recording, just yesterday morning was the announcement for the Tony nominations, and so I've got four productions that got nominated for a Tony Award. So fingers crossed, hopefully I'll be on stage receiving a Tony Award here in a couple months.
Yeah, man, that's really cool, and a really interesting investing strategy too, if that's where you're aiming your private equity dollars. So yeah, that wraps it up. Thank you very much for hopping on the show.
Thanks, Gabe. Appreciate it.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you want to support the show, just give us a like, subscribe, share, review, all that stuff. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.